We all love high dividends, and these stocks have the big ROE numbers to sustain them. Holy banana bread, let's do this. Return on equity, or ROE, is simply a measurement of a company's net income divided by their shareholders' equity, which is essentially their assets minus their liabilities. This number can be a good indication of profitability and a company's efficiency when it comes to making money. This is a great measurement to have in the positive, and the higher the better when it comes to a high dividend payer. The reason is that it can be a very good indication of the sustainability of that dividend, which can help us as investors feel a little better about investing in some of these, well, higher dividend stocks. Before we break out our calculator, tell me in the comments what you guys would like to see in some future list videos. Thank you for dropping in on the home of free financial content on YouTube. While you are here, please like and subscribe, as you don't want to miss a single moment, and a huge thank you for that click. For this list, I have found 7 stocks that all have ROEs above 20 and dividend yields above 6%. These stocks absolutely include a very good mix with some royalty stocks, some split core stocks, and of course some energy stocks. I am certain you will know a few of them, as we have seen them here before, but we also have a couple making their debut on the channel, which is oh so cool. So without any further ado, let's do this. Kicking off our chart, we have Olympia Financial Group with a ticker of OLY. They are a financial company that provides financial services to private health plans, business investment services, and they also have a division to cater to currency and global payments. Their market cap comes in at $164.83 million, and they have a pretty stable beta of 0.55. Their earnings per share comes in at 4.47, and they have a price to earnings ratio of 15.32. Their return on equity comes in at 53.20%, and their debt to equity ratio comes in at 27.52%. These are some pretty darn good numbers. Their dividend yield comes in at 6.131%, which is paid out monthly in the amount of 35 cents per share. In terms of growth, and let me tell you, sometimes the proof can be in the growth pudding. They entered 2022 with a share price of $46.90 and closed out the year at $69.01. This is a return of investment of 32.04%. Factoring in their dividends, we've got a total return in 2022 of 38.17%. That is not too shabby. I have absolutely no issues with this company. And star-wise, well, 10 stars is easily what they're going to get based just on their current conditions. They had a really good 2022, and from looking at their growth, you would never guess we were in a bear market. Coming in at number 6, we have a new company to the channel, and it is Headwater Exploration with a ticker of HWX. They are an oil and gas exploration company that is also involved in the development and production of petroleum as well as natural gas. Their market cap comes in at $1.41 billion, and they have a slightly volatile beta of 1.67. Their earnings per share comes in at 0.66, and they have a price to earnings ratio of 9.27. Their return on equity comes in at 36.62%, and their debt to equity ratio comes in at 0.20. I like that debt. It's almost nothing. Their dividend yield comes in at 6.536%, which is paid out quarterly in the amount of 10 cents per share. In terms of growth, they entered 2022 with a share price of $5.26, and they closed out the year at $6.25. This is a return of investment of 18.82%. Factoring in, of course, those dividends, we have a total return in 2022 of 25.36%. Once again, I have no issues with this company, and star-wise, another 10 stars based on current conditions. Holy banana bread, we're going to run out of stars. Coming in our 5th spot, we have a real estate investment trust, and it is the Slate Grocery REIT with a ticker of SGR.UN. They are an open-ended trust investing heavily in American grocery-anchored retail spaces. Their market cap comes in at $961.73 million, and they have a slightly volatile beta of 1.49. Their earnings per share comes in at 2.66, and they have a price to earnings ratio of 5.99. Their return on equity comes in at 18.22%, and their debt to equity ratio comes in at 127.15. This debt to equity is actually fairly good for a REIT, so I'm not as concerned as I perhaps sometimes would get in the past. Their dividend yield comes in at 7.35%, which is paid out monthly in the amount of 7.2 cents per share. In terms of growth, they entered 2022 with a share price of $14.40 and closed out the year at $15.30. This is a return of investment of 6.25%, and once we of course add in those dividends, we have a total return in 2022 of 13.6%. Once again, I have no issues with this company, and star-wise, another 10 stars based on current conditions. I mean, are you guys seeing a pattern here? Coming in at number 4, we have one of my favorite current stocks in SIR Royalty Income Fund with a ticker of SVR.UN. They hold some very good royalties in restaurants that include Jack Astor's and Canyon Creek Chop House. Their market cap comes in at $128.65 million, and they have a volatile beta of 2.78. Their earnings per share comes in at 4.20, and they have a price to earnings ratio of 3.66. Their return on equity comes in at a very nice 67.87%, and they do not have any debt. Whoa! Their dividend yield comes in at 7.42%, which is paid out monthly in the amount of 9.5 cents per share. In terms of growth, they entered 2022 with a share price of $11.16, and they closed out that year at $17.84. This is a return of investment of 59.86%, and when we factor in those dividends, we've got a total return in 2022 of 67.28%. That is not too shabby. In fact, this is one of those stocks, every time I look in my portfolio, it seems to be in the green. The only real issue I have is they are a little more volatile, but that really isn't a huge concern if you were in for the long haul. So once again, well, we get another 10 stars to give out. Moving on up to number 3, we have Pine Cliff Energy with a ticker of PNE. They are a natural gas-focused exploration and production company. Their market cap comes in at $556.32 million, and they have a beta of 0.97. Their earnings per share comes in at 4.46, and they have a price to earnings ratio of 3.46. Their return on equity comes in at a staggering 395.04%, and they have a debt to equity ratio of 2.89. Holy banana bread, I am loving these numbers. Their dividend yield comes in at 8.17%, which is paid out monthly in the amount of 1.1 cents per share. In terms of growth, they entered 2022 with a share price of 67 cents, and they closed out the year at $1.72. This is a return of investment of 156.72%, and when we factor in those dividends, we get a total return in 2022 of 164.89%. Holy banana bread. Wow. Can that 10-star streak continue? Well, no. This stock is actually only going to get 9 stars, as I did deduct a star for the fact they began 2022 as a penny stock, and they're kind of still penny adjacent. But nonetheless, some very nice returns last year. And honestly, if I had half points, this would be a 9.5. Because I almost feel like I shouldn't deduct that point. But I'm going to deduct that point because we just can't have all 10s. Moving on to our almost top spot. We have our first of 2 split cores, and it is the TDB Split Core Class A with a ticker of XTD. They are a split core stock that is exclusively investing in TD Bank. Their market cap comes in at $28.84 million, and they have a pretty volatile beta of 2.02. Their earnings per share comes in at 1.19, and they have a price to earnings ratio of 4.02. Their return on equity comes in at 27.18%, and they really don't have a debt to equity ratio. Their dividend yield comes in at 12.55%, which is paid out monthly in the amount of 5 cents per share. In terms of growth, they entered 2022 with a share price of $5.24 and closed out the year at $4.71. This is a return of investment of negative 10.11%. Factoring in their dividends, we have a total return in 2022 of
2.44%.
That is still much better than the market average. I am only giving the stock 9 stars, as their market cap is small, and that can sometimes be worrying. They also did not live up to the performance of the rest of the list. Coming in at our top spot is the Split Corp Class A with a ticker of ENS. They are a split core stock that is exclusively invested in Enbridge. Their market cap comes in at $264.42 million, and they have a beta of 1.24. Their earnings per share comes in at 1.74, and they have a price to earnings ratio of 8.89. Their return on equity comes in at 24.19%, and they have a debt to equity ratio of 65.81. Their dividend yield comes in at 10.09%, which is paid out monthly in the amount of 13 cents per share. In terms of growth, they entered 2022 with a share price of $14.39, and they closed out that year at $15.22. This is a return of investment of 5.77%. We add in those dividends, and we get a total return in 2022 of 15.86%. This one is another easy 10 stars. There's no way about it. With the return of equity focus on this week's stocks, it is quite easy to see that ROE can be a useful filter to help find some of those nicely performing total return stocks. High dividends are fantastic, but surrounding them in more stability is even better. As always, do your due diligence, as I am only the beginning of your research. It does not have to end here. Check out my video on Canada's telecoms that I will link on the left. Otherwise, check out the video on the right that YouTube thinks you will like. Your click will decide who is right, and I will see you in the next video.